Good morning and welcome to the 2021 UCSF Fraud Awareness Training, where we will address evolving fraud in extraordinary times. My name is Nikki Thatch, and I'm a co-presenter along with Celeste Sharma. Together, we will give you tips on how to prevent fraud, establish internal controls, and what to look out for. As a housekeeping item, if you have questions during the presentation, feel free to use the Q&A function in the webinar, and we will try to answer your questions in the end. In the event that we don't get to your question, we will post the answers onto the fraud prevention website. This presentation is recorded and it will be posted along with a PowerPoint presentation to our fraud prevention website. On today's agenda, we will cover the following. What is fraud? Fraud Pentagon, fraud trends, myths and facts about fraud, who is responsible for fraud, internal controls, COVID-19 fraud risks and controls, remote working and internal controls, telemedicine fraud and case studies, UCSF fraud reporting guidelines, takeaway, and lastly, questions and contact information. So what is fraud? According to the ACFE, fraud is an intentional or deliberate act to deprive another of property or money by guile, deception, or other unfair means. Example fraud include fraudulent or negligent representation of material facts, concealment of material facts, bribery or illegal gratuity, economic extortion, conflict of interest, theft of money or property, to name a few. There are 5 elements that contribute to increasing the risk of fraud. It forms what is known as the fraud pentagon, which builds off from the fraud triangle. The fraud pentagon adds 2 additional elements to the fraud triangle, and they are arrogance and competence. Together, this is a framework commonly used in auditing to explain the motivation behind an individual's decision to commit fraud. The first element is arrogance. It is an attitude of superiority and entitlement or greed. They simply believe internal controls do not apply to them. The second element is competence. Competence is an employee's ability to override internal controls and develop a sophisticated concealment strategy. The third element is opportunity. This is when weak controls provide the opportunity for a person to commit fraud. Note, without opportunity, even a motivated and rationalizing would-be perpetrator cannot commit fraud. The fourth element is pressure. This is when there is motivation to commit and conceal a fraud. Examples of pressures are the pressure to maintain a high standard of living, paying off debt from credit cards, medical bills, or a gambling addiction. The fifth element is rationalization. This is when someone's critical thinking errors leads to lapse in ethical judgment. An example of rationalization would be, I work long hours and I'm not well compensated, and so this fraud won't hurt the institution. In 2020, it is estimated that organizations lose 5% of their revenues each year to fraud. The typical fraud lasted 14 months before it was detected, according to the Association of Certified Fraud Examiners. The top 3 ways that occupational fraud is detected are 30% tips, 14% through management review, and 13% through internal audit. As you can see, the majority of fraud is detected via folks in the operation via tips and management review. According to this chart, the most common occupational fraud schemes in high-risk departments is corruption, and they pertain to the purchasing department, executive upper management, and operations department. There are some myths and facts about fraud. The first myth is we hire honest people, and so all I need is to focus on my problem employees. According to the ACFE, 86% of fraudsters had never been previously charged or convicted for a fraud-related offense. Also, 82% of fraud perpetrators have never been punished or terminated in their previous employment. Myth number 2. Internal auditors are responsible for the detection of all fraud. The internal auditor's responsibility for detecting fraud include evaluating fraud indicators and deciding whether any additional action is necessary or whether an investigation should be recommended. So who should be responsible for identifying fraud? Everyone in the organization should help identify fraud. That includes management and staff. Management has primary ownership of controls and is responsible for review and reconciliation to identify unusual or suspicious activities. Staff is responsible for being aware and following policies and procedures for their roles and departments. Staff should notify management if they become aware of instances of fraud or procedure violation. At UCSF, we started the Fraud Prevention and Awareness Initiative as a way to help departments identify, prevent, detect, and report fraud. There are procedures that management can use to prevent fraud, and they are: assess whether there's proper segregation of duties, authorization and approval, appropriate physical control over assets, regular review and reconciliation, and appropriate computer passwords and access controls. It must be noted that the most effective fraud prevention method is the perception of detection coupled with any combination of controls listed above. Management must perform reviews, analysis, reconciliations, count physical inventories, and audit its own records, and follow up on discrepancies, anomalies to demonstrate that there is a detection control within the organization. In the next section, Celeste will go over COVID-19 fraud risks and the need to maintain internal controls under these extraordinary times, as well as case studies of fraud at other institutions similar to UCSF. And lastly, what to do and how to report fraud at UCSF.
Thank you, Nikki. As Nikki mentioned in the next few slides, I will be going over increased fraud risks present due to COVID-19 and talk about the importance of maintaining internal controls as organizations fight to maintain viability in the face of COVID-19. The reality of a crisis is that it often hits when you least expect it. It is undeniable that COVID-19 pandemic is a crisis that has posed extraordinary challenges for organizations. It is not hard to see why the crisis might provide fertile ground for fraud. The combination of financial and health threats makes people more vulnerable and creates opportunities for fraud. Potential sources of pressure, opportunity, and rationalization, the three sides of the fraud pentagon as discussed earlier by my colleague Nikki, will be present in this pandemic. Let's look at these three elements and how it is flourishing in this current pandemic. Pressure is an important element pushing employees to commit a fraud. The impact of COVID-19 crisis exacerbates pressures on some employees. Some of it may come from an organization itself, such as a drop in financial performance, difficulty in meeting key performance indicators, adverse changes in compensation, or the risk of losing their jobs. When combined with external factors such as a sudden financial need of an employee caused by losses on investment or precarious situation of relatives, pressures may become untenable. What would normally be considered a red line may be crossed. Disruptions and uncertainties often create opportunities for fraud, as health safety measures such as work from home, travel restrictions, remote interaction with customers and suppliers are urgently implemented. Organizations have no choice but to adapt their business and control processes to the new environment. In practice, some controls may be modified, relaxed, or abandoned, and some unexpected gaps may appear without even being immediately noticed. Lastly, if during the crisis, employees perceive organizations do not provide support, do not treat employees fairly, or do not recognize their efforts, such perceptions may become the subjective rationalization factor, allowing to justify fraud, even potential collusion with external actors. It may be difficult for university leaders and managers to contemplate their employees being tempted to commit fraud or engage in misconduct during these challenging times, especially when the university and its employees are striving to overcome a crisis together. Yet with the confluence of these three factors, pressure, opportunity, and rationalization, the university needs to be hyper-vigilant in assessing its fraud risk throughout the prolonged period of uncertainty caused by COVID-19. Next slide, please. COVID-19 is first and foremost a public health emergency. However, we are seeing a sharp increase in the number of actual and attempted frauds and scams seeking to take advantage of this crisis. In December 2020, the Association of Certified Fraud Examiners issued Fraud in the Wake of COVID-19 benchmarking report. As you can see from this slide, cyber fraud, identity theft, payment fraud, unemployment fraud, and fraud by vendors and sellers were the top 5 fraud schemes observed due to COVID-19. It isn't surprising to see cyber fraud on the top of the list. Fraudsters are preying on the confusion created by this public health emergency and are posing as members of the domestic and international health authorities such as the World Health Organization or United States Center for Disease Control and Prevention. Victims are targeted with emails including malicious attachments, links, or redirects to updates regarding the spread of COVID-19, new containment measures, maps of the outbreak, or ways to protect yourself from exposure. Once opened, the computer may be infected with malware. The latest scheme that has emerged is the vaccine scheme. Fraudsters are sending emails offering things like early access to the vaccine, joining a waiting list for a fee, offers to have vaccines shipped directly to you. The pandemic also created a sudden increase in demand for personal protective equipment, such as masks, gloves, and disinfectants, which has led to an increase in vendor fraud. Organizations may not be doing their due diligence and vetting suppliers in order to source essential supplies from wherever they can. Fraudsters are seeking to cash in by selling substandard or fake products. The Association of Certified Fraud Examiners predict that these top 5 fraud schemes listed on this slide, including healthcare fraud, will increase in the next 12 months. Next slide, please. As organizations fight to maintain viability in the face of COVID-19, their initial focus has been, quite rightly, on external threats. Yet with the change occurring at breakneck speed, losing control of what's happening internally will greatly increase fraud risk. And this is happening in three ways. First, the business change. Major operational decisions are being made as organizations try to deal with unpredictability, cope with disruptions, and remain viable. Resource change. The shape of the workforce is rapidly evolving due to sickness, self-isolation, furloughs, redeployment, changing job profiles, and remote working. And lastly, technology change. Agile technological reconfiguration and emergency system changes are needed in response to the business and resource change as discussed earlier to enable the organization to operate in new and secure ways. These changes are going on at a lightning pace. As a result, important governance processes and internal controls may be neglected or relaxed to enable agile decision-making. Such controls include segregation of duties, authorization levels, system access, physical protection of assets, recording and tracking inventory, management monitoring or of exception and outliers. Next slide, please. In response to COVID-19, organizations can take several proactive steps to respond to fraud risk that may occur due to the disruption and prepare the organization to thrive going forward. With management's focus on day-to-day survival, there's an increased likelihood of deviation from checks and controls on key processes, less rigorous monitoring of control framework breaches, reduced control over assets such as inventory, equipment, software, and data, untrained or unqualified people executing key control. As such, management need to assess and continue to monitor a change control environment, including key controls such as segregation of duties or system access that may be weakened in a virtual work environment or due to workforce displacement. Listed on this slide are just some of the things organizations should consider following when determining the need for the modification of controls or new controls. It is important to investigate any suspected fraudulent activity rather than pushing it down the priority list under pressure to focus on day-to-day deviation from checks and controls on key processes. Key questions such as, are we clear on key controls over primary processes such as payroll and purchasing, and on whether these are covered? How additional controls should be considered in order to reduce fraud risk? How is performance of checks and controls being monitored while employees work from home? Are we monitoring any significant deviations from our budgets and forecasts as a means to spot check potential fraud? Should be asked when assessing your current internal control environment in relation to COVID-19. Next slide, please. Changes in working practices and remote working may impact internal controls. There was no time to plan when organizations had to activate remote working conditions. This placed increased strain on the internal control environment of most organizations, which are not always designed to be applied in home office situations. In addition to this, people are taking on new and unfamiliar responsibilities due to widespread staff absence, layoffs, and furloughs. The lack of face-to-face communication means that people rely all the more on electronic communication and can't easily ask a colleague for a second opinion. Pay close attention to the following when changing processes in this current environment. Be alert for changes that have resulted in one employee now handling the entire control process with no other employee involved. Be alert for processes that have a control that allows an employee to manually intervene and override the control, and be alert for processes that have no management oversight. Practicing appropriate segregation of duties and obtaining and documenting approval becomes challenging at a time when strong controls are needed the most. If maintaining the ideal control environment is not feasible, it is important to establish and implement modified procedures to mitigate risk to the extent possible. Next slide, please. Here are some examples of internal controls before COVID-19, changes in internal controls due to COVID-19, and potential fraud risks due to the internal control modifications. In the first example, pre-COVID, 2 signatures were required on all checks and scrutiny of invoices and supporting documentation was performed. Due to remote working, management no longer reviews supporting invoices and documentation when signing check. And as a result, the potential fraud risk is that payments are made to a fictitious company set up by the bookkeeper. In the second example, before COVID, the buyer is responsible to obtain 3 competitive pricing codes which are vetted by a second employee. Due to COVID, the second employee no longer performs the oversight process due to working remotely and lack of supervision. And as a result, the buyer no longer obtains competitive codes and starts receiving kickback payments from supplier for goods purchased. Next slide, please. In this next one, before COVID, the buyer is required to obtain a manager's approval for any new vendor entered into the system. Due to COVID-19, the manager allows the employee to manually sign off on the approval without any secondary review when the manager is not available online. The potential fraud risk is that the buyer establishes a fictitious vendor and then submits invoices for payments. And in the last example, supplies and equipment is required to be delivered at the physical work address, but due to remote working, employees are allowed to have supplies and materials delivered to their homes. As a result, the fraud risk related to this is that non-work-related supplies and materials are purchased by employees and shipped to their home. Next slide, please. Telemedicine, fraud, and COVID-19. So telemedicine isn't a new concept. When COVID-19 pandemic began, one of the first action items to help the healthcare sector continue to treat patients was the temporary lifting of a variety of federal restrictions against telehealth usage. The changes allowed the use of communication technology that was not HIPAA compliant and approved dozens of new billing codes to enable medical professionals to itemize and bill Medicare for telehealth services. This move was both good and bad. On the one hand, the lifting of regulations improved access, opening the doors to widespread adoption of telemedicine across almost all specialties. On the other hand, some providers surfaced to take advantage of the relaxed regulations and launched industry-wide billing fraud and abuse of technology, increasing the risk to patient safety. Telemedicine fraud was an issue before the pandemic, but fraud schemes have surged during the pandemic. In April 2020, a Georgia woman was charged with paying illegal kickbacks to providers ordering durable medical equipment for thousands of patients in a scheme that cost taxpayers more than 60 million in fraudulent claims. Next slide, please. In the following slides, I will go over a few examples of actual fraud cases that happen at UC campuses. In the first example, an employee was able to forge travel and entertainment receipts and steer funds to the employee's outside business. The employee was able to obtain more than $200,000 from the university, much of which was charged to a federal grant. Since the fraud was sophisticated, it was hard to detect. However, if the individuals approving the employee's travel had greater knowledge about the employee's work, they may have been able to detect the fraud sooner. As a consequence, the employee resigned before a termination could take effect. The incident damaged the university's relationship with its federal partners, and the university is working with federal agencies regarding repayment and has referred this matter to law enforcement. Next slide, please. In this second example, an employee used the university-issued P card for personal use. This fraud was discovered after the employee separated from the university. The fraud happened because the employee used a subordinate P card for which the employee was the approver. There was no additional oversight which led to this not being detected. As a result of this fraud, additional controls have been put in place by the department. Next slide, please. In this third example, a grant administrator forged purchase orders in order to buy electronic equipment for personal use. The same grant administrator also submitted travel claims for mileage that was not actually incurred. Since the grant administrator was a trusted employee for the transaction, and the transactions were not properly scrutinized by the employee, individuals approving them. As a result, because the fraud involved federally funded award, the grant administrator was prosecuted and served time in prison. Additionally, the university was responsible for paying back the funds to the granting agency. Next slide, please. In this last example, an employee was able to claim and receive pay for hundreds of hours of overtime for hours that were not worked. This was able to occur because management was not monitoring overtime usage to ensure that there was a legitimate need for the time claimed. After investigation, the employee was issued a notice of intent to terminate but resigned prior to the termination. The university is considering legal action against the employee. Next slide, please. As my colleague Nikki mentioned earlier, everyone in the organization should help identify fraud. If you suspect that fraud is being committed at UCSF, either by an internal or external party, tell your direct supervisor unless you suspect they're involved. Contact Audit and Advisory Services at fraud@ucsf.edu. If you want to remain anonymous, you can file a report anonymously through the UC Whistleblower Hotline or call 1-800-403-4744 to report anonymously. If you suspect that you have clicked on a link in a phishing email or in some way compromised your work computer system, contact the UCSF IT Service Desk immediately at 415-514-4100 or help@ucsf.edu. Next slide, please. In addition to the resources discussed earlier, you can also contact William Secord, who is the investigation coordinator with Audit and Advisory Services, or contact Irene McLean, who is the Chief Audit Officer, Audit and Advisory Services. Next slide, please. Some other tools and resources that is available include the fraud prevention website. This website provides strategies and tools to help prevent and detect fraud at UCSF. It also has FAQs and webinars, such as the one we are doing today, which is posted on this website. Also on this website, you will find a fraud prevention checklist. This checklist was developed to help departments assess their own internal control strengths and fraud risks. The checklist is divided into process categories to guide departments as they seek to identify opportunities to improve controls and reduce fraud risk. Next slide, please. So some of the takeaway from this webinar would be to be vigilant in this current environment, ensure that there's adequate internal controls in place, and if during remote working, controls that may not be working in the current environment, ensure that there are compensating controls in place. Be aware, attend training such as this one, and if you see or suspect anyone committing a fraud, please report the fraud and through the channels that were discussed earlier. Next slide, please. So with that, this concludes our webinar. Thank you very much for attending. And please do not hesitate to contact us if you have any questions or comments.